Right, we now move on Zoom to the co-founder and managing director of...
He's here in person.
He's here in
Oh, now in person.
Upgraded.
In Zoom.
First question should be ours. You didn't give us.
So there we go. Is this AI in action? I don't know.
again.
But anyway, Sam, thank you.
Thank you.
Thank you for coming. I didn't see you slip into the room.
If I'm AI in action, I wouldn't invest in it then. Here you go.
Oh, very good. Okay, we look forward to your presentation. As you can see with others, we're pretty pressed for time, so if you can keep it pretty brief.
Yeah, look, I'd like to really not focus on the cause of the problem here. This committee is evidence of the fact that there is a problem. I'll leave you with one number in your minds: $5 million a day. That is approximately the excess banking profits that we think the banks are making in New Zealand. It's about $1 per person per day in New Zealand. And that is because if you have a look at other markets that have gone into open banking, profits of the mainline banks have generally gone down about 20%. That is about $2 billion a year in New Zealand on pre-tax profits. So basically what the banks are making is about a Dunedin hospital every year in terms of excess profits.
Someone's making it.
Yeah, well, the Aussies mostly, the Aussie shareholders. So that's the problem. The issue, I guess, is how to fix it, because Simplicity and myself have for 9 years been talking about excess bank profits. We're delighted that we've got to this point now. But the real question is not that they exist. I think that's accepted now. The Commerce Commission have proven it. It is, what do we do about it? And really, there are only three things that you can do about it. And I speak as an ex-banker, as a KiwiSaver manager, as a large-scale investor, and as someone who would actively participate in the banking industry, investing in the banking industry if it was possible. The three things are as simple as this. You've got to make Kiwibank a proper competitor. For the last 2 decades, Kiwibank has been a one-arm boxer in a ring with 4 heavyweights. It has created the illusion of competition. So well-paid banking lobbyists who are probably texting you right now have been able to say, listen, this is a fair fight because we're competing against a state-owned bank, not when it is an unlicensed state-owned bank. Why Kiwibank have never been able to get more than 5% market share, they simply haven't had the capital. So you have to beef them up in order to allow them to compete. That capital can come either from the public purse, I think that is unlikely, but it certainly can come from the private purse. There is $120 billion in KiwiSaver invested now. That is going to be in excess of $1 trillion by 2050. A portion of that would, I think, very enthusiastically invest in recapitalising Kiwibank. So I'll go on record in saying that we are in principle keen, and we represent only New Zealanders' money. So it would be locals investing in the hood to beef up Kiwibank to compete with the Aussies. So competition is the best way to sort this out. The second thing that you can do to create competition is to take open banking seriously. I have seen in the last decade every single fintech come through my office wanting money and wanting to disrupt the banks. And in the first wave of them, none of whom, by the way, exist now, what they said was, oh, all we have to do is get the banks to do ... And the banks didn't do it. Why would they do it? Because the allowing open banking means you're endangering that $5 million a day of excess profits. They have had no vested interest in making sure that open banking exists in New Zealand. They've played the game, they've pretended, there've been lots of nice press releases, but where's the beef? Where is the example of a well-capitalised disruptor in this market, funded and supported by the banks? And I've seen so many examples of them dying on the vine because the banks have not encouraged open banking. So you have to make that happen. There is a time when competition and capitalism, by the way, I'm an ardent capitalist. I usually prefer competition to sort these things out. There are some times when regulation and legislation just has to step in to create a level playing field for competition. Because as you previously heard, and I'm sure from other speakers, it's not a level playing field. It's a very unlevel playing field. It is an oligopoly, as the Commerce Commission said. So that is the second thing, take open banking seriously. And the third thing is take Payments New Zealand seriously. Payments New Zealand is the wiring, the plumbing of the business, which has been effectively an industry body funded by the industry. And when the industry is dominated by the 4 big banks, it's no surprise that Payments New Zealand has, in my opinion, actually delivered up to the big banks exactly what they have wanted over the last decade, which is a system that makes access and fair play very difficult. Payments New Zealand is an organisation which you wish to continue to be run by the industry, but has to be supervised extremely closely, because the individuals in them are very nice people, but you are ultimately incentivized by the people who pay you. And the people who pay for Payments New Zealand are ultimately, mostly, the large banks. So you have to supervise them extremely closely and make sure that there is a level playing field. In my opinion, those are the only three things you can do. Beef up Kiwibank, make sure that there is proper open banking and customer data rights, and then keep a very close eye on Payments New Zealand. Practically, I think not only does that play to the amount of money which will be available to invest in New Zealand via KiwiSaver, which will be hundreds, already is over 100 billion and will be over $1 trillion in our lifetimes, but it also creates basically a level playing field to allow the financial industry disruptors, all of whom I see, and there's now a second generation coming through in the anticipation of open banking, to compete. And then if we have Payments New Zealand making sure that they're really maintaining a level playing field, I think we'll be in a good place. But it took us decades to get into this problem, and it's going to take us decades to get out. There is no quick fix. What I would also advise this committee is to be aware of the three things that the banks do. First of all, is I have seen them play on fear. We need a strong banking system, and that justifies their super profits. We have a strong banking system. And as you know, with the banks, they privatise profits but socialise the losses. Yeah, sorry.
Okay, we're going to go to Arena Williams, and then we're going to go to Miles Anderson. Arena.
Kia ora, thank you for coming in. Two quick questions for you.
Sure.
Kiwibank came in here and told the committee that they're writing a third of the new home loans, and we know that their first home buyers product is incredibly popular. They are our maverick bank when it comes to first home loans. Is that what they should be competing on, or do you think that they should expand their mission? Yeah,
look, first home loans are the most profitable line for banks. That's why the existing big banks have been slowly withdrawing from commercial and rural lending. So it is a place that they should compete because it impacts the most New Zealanders. But I can tell you, Kiwibank are going to run out of money. If they got a third of the market share, they're going to stop doing that pretty soon. They won't have the capital to support taking that much market share for very long. They need more money. But yes, it's something they should certainly be doing.
Should Kiwibank have different capital requirements to the large four banks?
No, I think they should have the same. If they want to be a big player, they should play the same game as the big player.
What should Payment New Zealand's role be in customer data rights and open banking going forward?
I think Payments New Zealand should be, in every circumstance, allowing access to that if the customer wants it to happen. A whole lot can happen if you give customers the power. And power over their data, and most importantly, power to transfer their data to whomever they wish, will be a massive enabler for the fintech industry will not thrive unless that happens.
Is Payments New Zealand having a governance role over the open banking regime, gamekeeper turned poacher?
Well, trust but verify. Make damn sure that they're actually keeping a level playing field. I have no issues against the individuals in payments in New Zealand, but I have a problem with the way that it is funded and has been funded, because I think ultimately, it has created perverse incentives for no change. Look at New Zealand. 15 years ago, FPOS, we were the leader of the world in technology. Now we're Stone Age. We're still playing surpluses when we do a pay wave. That's crazy. It's dumb.
Okay, Miles Anderson.
Yeah, thanks, Sam. Look, our banks in New Zealand really seem to be obsessed with home mortgages, and what changes, apart from what you've suggested, can be introduced to get banks to lend to commercial and farming businesses so that we can be more productive?
Yeah, well, I think you'd have to change the capital requirements. That's a Reserve Bank issue there. Banks are disincentivised to lend to commercial and rural, although sometimes that's the reason and sometimes it's the excuse.
Yeah.
They still make good money from it, but they just make better risk-adjusted returns. You've had one of the heads of the banks here say, we only make as much money as New Zealand companies. Yes, but you're far lower risk. You shouldn't be making as much because, you get bailed out by the government if you go bust, right? So to get them to do more rural and commercial lending, you either have to get the Reserve Bank to incentivise them by making the capital requirements lower, or quite frankly, you have to give them a kick in the pants and actually say, no, our expectation, there will be regulatory consequences if you do not increase lending. I don't think this has to be pure regulation legislation. Remember, banks are so profitable that they operate on fear as well. The fear of regulation and legislation, the fear of them making less money does actually change behaviours. I've seen it. I've been on the other side of the fence on this. Yeah. So for certain Reserve Bank capital requirements, but I think you have more power than you think.
Okay, we're going to go quickly to Todd. and
Thanks,
then
and your
Chloe to
3
wind
points
up.
are very clear. Just sorry, but back quickly on payments in New Zealand.
Yeah.
The previous submitter just actually said it should be sold, basically,
Mhm.
in a sense. Would you be in favour of that? Because
Yeah, look, in my ideal world, it would be owned by the government and regulated by the
but
government.
does it need to be owned by the government? It could be owned by anyone, but
Well,
just not
It depends on
Right.
the incentives of the owner, right?
Questions
It
on that.
depends on who owns it.
right.
So, yeah, absolutely. But absolutely, it's suboptimal at the way. This is why we are one of the reasons why we're in the Stone Age, by the way. It's who has owned the plumbing.
Yeah.
Okay, Chloe,
I mean, I was going to pick up on that thematic of power, control and incentives, and particularly around KiwiBank. I mean, your core recommendation is really around beefing up KiwiBank, and you seemed relatively agnostic in your introductory remarks around whether that comes from the public or private purse, but that will entail different incentives. And in a hypothetical world, if KiwiBank is sold off to, I don't know, whether it be international players or otherwise, and we end up with a situation where we just have these big 5 banks and none of those structural reforms.
Yeah, I agree with you. It should not be sold to international players. If KiwiBanks recapitalise, only New Zealand institutions like KiwiSaver Fund should be allowed. If we think about the 1990s, it was we went cap in hand to Johnny Foreigner because it was the only pool of money available. We have as a country, we have say $200 billion in KiwiSaver, NZ Super Fund and ACC. We can now afford to recapitalise it ourselves. We do not need foreign capital to do this. And I would be implacably against that because I think we'll just end up in the same place. We'd have a 5-bank oligopoly, not a 4-bank oligopoly, right? You need a big, hairy state player to beat up everybody else. And they have to have this is a balance sheet. This is a war.
Yeah.
This is a war of the balance sheets, right? At the moment, the only person that we think could give KiwiBank the balance sheet would be the government in the old days. Now, the private market can provide that balance sheet. We would enthusiastically participate in this because banking is a profitable industry. This would be good for our members to own a chunk of KiwiBank.
Private market
And
with
there
New
would be
Zealand money.
a fair return. It would be all our own money. We would be investing in the hood, right? Beefing up our state champion to create the competitive tension that the Aussie banks have clearly not had, judged by their profit, but clearly could have if we had a state champion.
Okay, members, with your permission, we're going to extend this a little bit longer because there is interest here and Sam's on fire. So we're going to go to.
No, this is normal for me. You haven't seen me on
He's
fire.
not on. Okay.
Whatever.
Barbara Emmons.
So ultimately, throughout the whole inquiry, we've been trying to understand economic rents when it comes particularly to that oligarchy. My question is the previous submitter in their written submission talked about a windfall tax. The previous chair of this committee, one of the very first questions he had was around a windfall tax. What is your view around capital flight? Because we know that that's one of the potential issues. Do you have any ways that we can mitigate that?
You mean if there's a windfall tax, the
There's a
Aussies
windfall
withdrawing
tax,
from New
on
Zealand?
excessive profits after tax.
Look, I've seen the banks play 3 games here. The first one is fear. We need a strong banking system. The second one is threat. We will leave if conditions give it. Yeah, right. Like the Aussie, New Zealand is the most profitable. If New Zealand was a state of Australia, perish the thought. But if we were, New Zealand would be the most profitable state for all 4 big Aussie banks, right? If we have a windfall tax, what will happen there is that tax will get paid, but they will still operate here. Now, I'm not in favour of a windfall tax because I think ultimately it will just be recouped from. You have got to have competition. If you tax somebody, they're just going to find a way to get it back from their investors, unless you're changing the competitive dynamics of the industry. So I don't believe there will be windfall. I don't think any of them will pack up, and they threaten to take their capital away. Actually, an awful lot of their capital comes from New Zealand anyway, New Zealand depositors. But secondly, if you look at the profits, if it's 20% in excess of global norms, the windfall tax would have to be huge for them, and they would have to think that tax was going to be in place forever,
Over a certain period.
over a very long period of time to change their behaviours. You have to think about the incentives here. Profit is the incentive. Yeah. A windfall tax is, to my mind, I'll leave politics to the politicians. Makes a great headline, but it doesn't change the behaviours of the banks.
So going then to how we increase KiwiSaver, and you've said sell it back to the private market, for example, KiwiSaver providers would be happy to pick it up. What would be, given the rate of return, have you thought about the rate of return to KiwiSaver providers by having a caveat that if there was a first right of refusal, it had to come back to the New Zealand government. You couldn't just
No,
sell it.
yeah, and look, that would all be priced in, but let me put it this way. First of all, I wouldn't want to own a majority of Kiwi Bank.
Yeah.
I'd want to own a minority because I want the government to be the dominant player. I want them to have the mana and the potential of the balance sheet to effectively create a stable state-owned player. I want to invest in a state-owned bank, right? Secondly, I would want a lower rate of return because it is Kiwi Bank.
Yes.
It does actually have inherently lower risk because, you know, the government's standing behind it as a majority owner. So we would accept a lower rate of return. What would that be? We would accept profits of the Australian banks and any bank as being about 20% less than they are right now for us to still consider that to be a very good risk-adjusted return. Remember that banks fundamentally are an amazing investment from our perspective. Why is that? And you've heard this before, but it's so true. The profits are privatised, the losses are socialised. When was the last time a bank went bust in New Zealand? It was the BNZ, and who bailed it out? The government. They will every time. So it is an extremely low risk investment, way lower than the banks would lead you to believe, right? So why is it such an enormous percentage of every pension fund manager in the world is in banks? Because the returns versus the risk are important. That is why, you want to see my blood boil? When you had the head of a bank in front of you saying we should be making as much profits as the normal market, we're only making as much as the normal market, you are taking way lower risk. Your return should be lower. It's risk versus return when it comes to investing. They get the same return as the rest of the market with much lower risk because you will bail them out if they go bust, but you won't bail out any other private company if they go bust. So we will accept a lower rate of return. We would want to be a minority holder because the thing with Kiwi Bank is, I think they're a pretty well-run bank. They need the beef, the capital to compete, and they need some competitive tension around the board table. They do need to have somebody from, you know, a private owner encouraging them, but that can be a local. And so I would not be an advocate of actually selling too much of Kiwi Bank. I would do it successively in a staged process and keep it majority state-owned.
All right, thanks, Sam.
Yeah.
Very good. We're going to go to Susan, we're going to go to Dan Bidwar, and then I think.
Thank you, Mr.
Oh,
Chair.
you're
My
done?
question's been answered.
Dan Bidwar and then Nancy then.
Thank you, Mr. Chair. Sam, one of your first point was around why mortgage rates are high. I'm just wondering what you think to the view out there that mortgage rates are high more structurally because of where we're located and the fact that New Zealand has low saving rates.
Yeah, no, that's complete fiction. And I'll give you a practical example. We Simplicity do first home mortgage lending. It is on average about 1% lower than the banks, and yet we provide a fair risk-adjusted return to our KiwiSaver investors who are providing that money. So that our members make a profit, a fair profit from the lending, and the lending is cheaper. So there's a real-world example of the fact that you can actually run a fair business with lower mortgage rates. No, it's absolutely not true. The rates are excessive. And by the way, that's why we're in the business. We want to compete with them. Yeah. So no, it's a gold mine, witnessed by the fact that you have seen the injection of a tremendous amount of capital and a tremendous amount of energy by the Aussie banks in New Zealand. They love it here. They're not leaving.
Okay, Nancy?
Very quickly, you said Kiwi Bank is the one little guy in the ring of four giants, and you talked about lifting the Kiwi Bank. How much, like in your world, how much do you think that needs to really make an impact?
Oh, that's a tough question, but I'm guessing here. But let's start out with $500 million to $1 billion a pop. Let them absorb it, let them lend it, let them take market share. They've got to do some digital upgrade, although I'm less of a believer. Believe they could go and get market share as they clearly are right now if you give them money. I would actually bring some commercial discipline into Kiwi Bank. I'd get somebody sitting on that board which would hurry them along with this digital transformation because it seems to be taking forever, having failed once already. So maybe there's a little bit more, a little bit more shoe leather required there. But you can give them, I think, that amount of money and they can progressively lend it out. Don't do too much too quickly. They can get indigestion, and you get irresponsible lending that can happen there. So no, time is our friend here. You own it. You can make it a competitive beast over the long term.
Thank you, Mr. Stubbs. Did you have a closing comment, Mr. Hamilton?
Hi, Sam.
Hi.
Big fan. So
Thank you.
I'll caveat with that. But look, I just want to challenge you a bit on the KiwiSaver thing.
Yeah.
We've seen, we've heard that potentially over time comes another one of five. Would it, and I appreciate there's no one fix here, wouldn't it be better to change some of those regulatory settings into 10 fintechs, hitting the market and really stimulating competition or other low-cost providers like yourself?
Yep.
No.
Yeah, no, I think that's a very good point. I would do both. Yeah, I think it needs both. I mean, I'm not saying that any one of those three is the solution. You need all three, I think, to various levels. You just got to create a level playing field for the fintechs. The interesting thing about the fintech industry is it needs very little capital, right? Simplicity was set up by me selling my batch. That was done. Unless you are a bank, you don't need regulatory capital. Fintechs can just get by. They just need a level playing field to compete. Right, they've never withered on the vine through lack of money. It's through lack of ability to actually look after their clients and deliver the services they wanted, because it was an unlevel playing field. So yeah, no, you need all.
And that largely goes to capital reserve settings in the background, like we talked about with judo, that had 15 million rather than 30 million, and the ability to call themselves banks. And
I get that. That's if you want to be a bank, though, right? You can operate in a whole lot of financial markets without being a bank. Simplicity is an asset manager. It is a mortgage lender. It is a property investor. It is a whole lot of things without being a bank. Yeah. So you don't need to be one in order to compete with the banks. Yeah.
Okay. Thank you, Mr. Stubbs. Thank you so much.
Thank you.
We appreciate that time, and thanks for staying around for a little bit longer to get through some more questions. Thank you, members.
Thank you.
Right. Well, that ends the public session for now. Okay.